Hi, I'm Amy Sandlin, a Tax Quality Control Senior Manager at Blue & Company. We always keep an eye on current legislation in Washington to make sure any changes to the tax code don't sneak up on you and your business. A bipartisan bill titled the Tax Relief for American Families and Workers Act of 2024 took another step towards passage on January 31st as it passed the House with an overwhelming majority vote of 357 to 70. It now moves to the Senate, where the hope is that this bill's momentum will continue all the way to President Biden's desk to be signed into law. So let's break down what makes this act so impactful if signed into law. As the name of the act implies, it has provisions for both families and businesses. Most of the tax relief for families comes in the form of an enhanced child tax credit, also commonly referred to as CTC. Under current tax law, eligible taxpayers can claim a tax credit of up to $2,000 for each qualifying child, with a limit on how much of the CTC is refundable. The Act holds the maximum CTC at $2,000 for the 2023 tax year, but increases the CTC for inflation in 2024 and 2025. Under the Act, the refundable portion of the CTC, now capped at $1,600 for the 2023 tax year, increases to $1,800 for 2023, with additional increases to $1,900 and $2,000 for the 2024 and 2025 tax years, respectively. On the business side, there are three major business changes, and some are retroactive. First, domestic research and experimental expenditures will be deductible for tax years from 2022 to 2025. Secondly, the Act modifies the calculation for interest expense for certain businesses. Finally, two measures impact business depreciation deductions. The Act delays the 80-60-40 phase-out of bonus depreciation from the Tax Cuts and Jobs Act and allows for 100% bonus depreciation through 2025. Additionally, the Act enhances the Section 179 deduction, which also allows for a faster depreciation recovery. To help offset the cost of this $78 billion tax bill, the Act increases penalties for nefarious promoters of the Employee Retention Tax Credit and any businesses that have taken this credit improperly. Additionally, businesses can no longer claim the credit after January 31st, 2024. If the Act ultimately becomes law, many provisions will only be in effect through the end of 2025, which is also when many of the taxpayer-friendly provisions of the Tax Cuts and Jobs Act are also set to expire. We will continue to watch the bill as it works through the Senate. Read our full article that breaks down more provisions of this Act in greater detail at blueandco.com. And make sure to follow Blue & Co. on LinkedIn and Facebook to stay up to date as our tax experts work to stay on track of this new legislation.